So now I'm hoping that I've wet your whistle a little bit by introducing you to technical analysis and somewhat of what I do day to day as a trader. Some of the basics we've just covered. What about what sort of markets suit trading as opposed to investing? Well, for me personally, the most important thing when I'm looking for a market to trade, it's volatility. And we've got that in spades in crypto. There's so much volatility, and that's the reason why I'm focusing my attention on this area. It really is a wonderful market for traders because the market moves so incredibly well. But we've got to be working towards markets that give us the conditions that we wish to be trading, that allow the strategies that I employ to be giving us an edge and minimizing that risk. Because time and time again, you'll hear me say, you've got to manage your risk. That's things like the 2FA, the sorts of stuff like the storage that Luke talked about, but also there's other ways that we can minimize our risk. One of them we've touched on, which is optimal chart structure. So what do we need to look for as traders? We need to be finding markets with optimal chart structure, which means not that gappy looking chart that we looked at earlier. We want nice, smooth, flowing, trending charts. And we tend to find these types of charts within the top 100 crypto assets. Now, if I'm going to trade something that is very, very low market cap, i.e. a very small, underrated token, what we have as an issue is that we might not be able to get the amount we wish to buy and sell at the right times. We might also not have the sorts of trends that we can use these strategies upon, just simply because they're all over the shop, they're a bit of a mess, and they are open to a little bit of manipulation if that was to be the case. We want to avoid this, and we want to work to our probabilities being in our favor. And the way to do that is to focus mostly on the top 100. Now, of course, this will change as more money comes into the market and the market capitalization increases. We might go outside of the top 100. I love trading within the top 10 against the US dollar, against Bitcoin, and against Ethereum. And the reason for this is they have a huge amount of volume. Volume means that there's more people buying and more people selling, which means I've got more people to buy from at the levels that I want to and also sell to at the levels that I wish to, whether that be to take a profit or when my stop loss gets hit and I need to take a loss. Either way, I need a market that I can move within, in and out of with ease. And within that top 100, we have that more or less. The other thing with focusing on those top 10 against Bitcoin, against dollar, and against Ethereum is that we do have a lot more options. You can actually trade a number of these with leverage if you so desire to do so. Now, this requires a bit more training, better understanding for the strategies, and a very implicit understanding of risk, but we do go through that later on. It is important to be focused on what you want in the markets, not the outcome, but the process. And part of that process is having that smooth, flowing, trending chart, optimal chart structure. And that can be found within the top 100 for the most part.
The Trader Cobb Crypto Show, talking business in blockchain.